Good morning, Jags. This is Fahad. Today is Friday, February 26th. Let's get started. There's always a bull market somewhere. No matter what is happening in the market, there's always a bull market somewhere. If somebody is losing money, somebody is making money on the other side. And so last night I'd start to do some digging to find out if there was any strength in the market at all last night, with more than 92% of the securities in the S&P falling, and as well as in the NYSE. And I wanted to basically screen out anything that are low priced stocks because they are very, very volatile in nature. And I wanted to focus on established names to see if there was any strength anywhere. And I found out that exchanges, which makes so much sense here, were all actually holding up rather remarkably well. And they should be, given the rising volatility and the rising volumes across the board. The chart that's in front of you is CBOE. You don't see any selling pressure here at all. This thing held up perfect. This thing held up remarkably strong, finishing right at $100 per share. And if you look at the last couple of days, this thing has been actually showing relative strength as the market has been selling off sharply. Here's another way of taking a look at the CBOE chart. You can see that this is the major VOP resistance right around $100, $101 per share. We got the RSI bull cross, the MACD bull cross, and the volumes have been going higher. And similarly, if you go to CME, right here, CME was up nicely yesterday, also breaking out on high volume. It cleared through $200 resistance, which also happens to be the VOP resistance going all the way back to spring last year, and gradually taking on gains and moving higher. And on the other hand, if you go to ICE, ICE, while this is rather flat, but this also has a wedge formation for a potential breakout. All right, and we'll see if this thing will also start to move higher. But the most important thing about this chart is when you look at this was also firmly in green yesterday, no selling pressure, and look closely at the volumes. Volumes have been rising in ICE as well. So all three of these are doing remarkably well. Now, for those who do not know, CBOE owns VIX products. And you all know that VIX has been extremely volatile for the last couple of days. I think it was the 23rd biggest single day gain in VIX yesterday, and call options and put option volume in VIX was extremely, extremely high. Anytime when somebody's trading VIX, they are going, this is actually a CBOE product. And CBOE is also one of the biggest market makers for option market. And we know that the option volumes have been exploding higher because of retail participation everywhere. We have shown a lot of charts around that. What used to be up until, let's say, 2 years ago, 16 to 18 million contracts per day, now generally sees 27, 28 million contracts per day because the retail participation is so strong. And when you get volatile market like the way we have this week, the participation goes up even more. Going back to CME, CME is the biggest exchange for the futures market. And it's not only just the equity market futures or the index futures, but also the interest rate futures and the Forex futures market. And guess where precisely we are seeing the extreme amount of volatility? It's in the interest rate futures. As you know, TLT has been crashing. And look at the volume in TLT yesterday. Maybe it was the crescendo of selling that we saw yesterday. Or you can look at TBT. Huge surge in volume in TBT yesterday. Or you look at TNX. TNX is the actual bond yield on the 10-year, which was skyrocketing. So all the volatility has been centered around the interest rate futures market. And guess who makes that market? That is CME. So both of these companies, and I can throw ICE into that too, but the difference thing about ICE is that ICE is one of the biggest makers or exchanges for the commodity market. One could argue that that market is also just as volatile because you've seen some really impressive gains made in the crude oil market, in lumber market, as well as in copper and other futures on the metal side. So all three of them are benefiting from same trends, but for different reasons: rising volume and rising volatility. But of all the three, these two particularly CME, would be the most obvious one because all the volatility is taking place right around the interest rate futures. After that, the second one would be CBOE, which is quite a depressed name in my view. But if the VIX stays too volatile, and if we continue to see option volumes very, very strong, this benefits the case for CBOE. Now, this is not just a theory. I actually wanted to check to see whether there are trends that I can point to which would show that that is exactly what we are seeing. So here's a chart that comes in. Now remember, this comes from Bank of America, but this is as of February 25th. So I'm not exactly sure if it is capturing the full data set of the volatility that we saw in the market yesterday. Nevertheless, even without accounting for yesterday's volatility, it is showing a sequential improvement in all three exchanges. I've highlighted two columns over here for CME, for ICE, and CBOE. And take a look at closely. Year over year, these volumes are deeply negative, but month over month, every single category, is basically sequentially improving. If you look at the interest rate futures, which is the biggest piece for CME, take a look at this jump. Minus 31% year over year, but month over month up 42%. Now, these are the volumes comparing February to January, right? And February volatility happened yesterday and early this week. So again, I do not know if it's capturing everything, including yesterday's price section. Nevertheless, 42% year over month over month growth is very impressive in the interest rate futures. But even on the equity side, which is still down, but improved from minus 20% year over year to minus 10%. And you look at Forex, same thing. Ag did not do so well, but take a look at energy. And we know the energy market is very strong. And metal also improved. Then you go to ICE, you see the exact same thing. They all inflected positively. Take a look at ICE also has a very large, not as big as CME, but ICE is a very large interest rate futures market. Take a look at this jump from minus 3% to a positive month over month trend of 49%. And then you look at CBOE, which is the VIX. And here you go. We're seeing sequential improvement in all of them too. This is telling me that these, and then when I saw this data point, I then compared to whether the street has started to move their earnings expectation for the current quarter, for the first quarter, higher based on these trends for any of them. And nobody has moved the earnings estimates higher. And I think that's where the element of surprise will likely come from. I think all of them are going to continue to benefit from this increasing volatility that's in front of us. And these charts, as a result, should gradually work higher. CBOE, when I look at it technically, because this is a major VOP resistance right around $100 to $101 per share. If it starts to break out from that after a year long of consolidation, there's air pocket in this stock up to 115. Up to 115. So that's substantial move to the upside. And if one is doing this using call options, about 3 months out call options, they can probably bank pretty good amount of money. And similarly, if you go to CME, same thing. This thing just started to break out. In this case, you have to take a look at the long-term scale. With this kind of rampant growth that is taking place, and Federal Reserve is on hot seat right now to do something about the interest rate futures, all the chances are, because interest rate futures, the biggest market for them, this should really break out through all of this consolidation that we saw back in early 2020 and in 2019 and make a run towards new 52-week high, basically maybe going all the way to $230 per share. Those would be the two biggest beneficiaries in my view, but I also think that ICE will also benefit if the entire sector is running strong. All right, that's it from me. Let's go to Jay.
Morning, everyone. So taking a look at two earnings reports this morning. Stock number one is Powerfleet, ticker PWFL. So when I go through the transcript, I think it's safe to say that this was a transcript filled with partnership announcements, partnership wins. I'm not going to go through every single one of them, but I do want to highlight a few notable ones. Now they break it down by each segment. So starting with the industrial segment, for me, the most notable comment was when management talked about how after their successful upgrade with Walgreens, they have been aggressively working with their longstanding customers to transition them from their older legacy platforms to their next gen solutions into a reoccurring revenue model. They expect to see several of these major customers commence the transition in the second half of this year. It is worth noting that these major migrations require both the telemetry unit refresh and a migration to their software as a service cloud-based platform. This legacy customer base represents over 30,000 units in a high value product sales potential, and nearly all of these customers pay little to no reoccurring SaaS fees today. So I think a source of potential upside in this segment. The logistics segment, they announced well, not previously announced in Q4, but a major supermarket chain in the Southeast placed an order for 1,200 trailer and reefer platforms in Q4, and they've already started shipping these units. They then talk about their Ryder logistics win back in June of last year. They comment they've only installed 6 locations at Ryder in 2020, and there's 24 more to go. So potential upside there. And then the vehicle segment, they comment how they're seeing significant interest in the construction equipment segment. This growing interest and traction was confirmed by their agreement they recently signed with a major construction equipment company for a minimum 2,500 units, which started shipping in Q1. In addition to this win, they are currently in field trials with 3 large construction equipment prospects. And then finally, when I first brought this company up on January 12th in conversations, one of the areas of focus was a rental car company, the largest rental car company, which they never mentioned it, but if you look at the data in the industry, I believe that would be Enterprise. But the conversations with that company continue. Nothing has been signed yet. It seems to be a slow-moving process, but they did also mention that there's another rental car company that they're looking to sign as well. So like I said, this transcript was filled with partnership updates, and I really didn't see anything negative in the report that would make me cautious, as we start to progress through the rest of the year.
Excellent stuff. This is exactly what I wanted to see myself too, because I have a position in this particular stock. And I looked at it from a high level yesterday, and so I'm glad you went into the details exactly what was in the earnings transcript. And these partnerships matter because they basically build a strong foundation with these large customers, and Walgreens and Enterprise and such, which should continue to solidify the company with a strong revenue base going forward from here. So I think that, and yesterday's relative strength in the stock, even though then towards the end of the day with the market accelerating the downside, it finally started to give up some of those gains, but it was holding up nicely early on when the market was very, very weak. And was trying to break out. So we'll see that now with the market stabilizing, if we're going to have more attempts over here to eventually break out and make a run towards new 52-week high. The wedge is tightening here. And to anybody who missed, right here is the clip from January 12th. You can go to Jaguar Media and watch it when we presented the bull case.
And then stock number 2, Monster Beverage. Just a really strong quarter, no doubt about it. Q4 legacy US sales were up 16%. And that was actually also because of strong growth in untracked channels such as Amazon, Costco, home improvement retailers. Stifel anticipates continued strong growth through the first half of 2021, especially benefiting from these new product launches, Ultra Watermelon, Chaotic, Papillion Juice launches. And the most recently launched Ultra Gold. There was a note that Stifel put out today where they highlight, according to Statline, which tracks energy drink sales on Amazon in the US, Monster sales have increased 194% in the 4 weeks ended February 13th, and that is above the broader category growth of 177.8% and Red Bull growth of 172%. So the sales continue to be strong. Internationally, sales were up 20.4%. The company also disclosed that for January, sales were up 18.2%. Stifel notes that comparisons do become easier through Q1, and that consensus sales growth of 9% right now appears too low. And the final point that I would say, and probably the elephant in the room, is the update on the alcohol hard seltzer category. The company continues to review this, and I think they're just being smart about it, because they even admit when you look at the alcoholic side, you're competing with so many other companies and products, White Claw, Truly, and they admit the alcoholic side has become very crowded, so they are reviewing it. Stifel thinks that this, if they do decide to go the alcoholic route, probably won't be introduced until the second half of 2021. But I just think they're being smart about this decision. They're not rushing into it at all.
Sounds like they're just keeping radio silence on
They
this
are. They're not giving the updates.
Yeah, until they are fully prepared and ready to actually announce, which, as you said, is they're being smart about it, because I think that they probably realized too that on the street, since they first, sort of like a high level threw this idea out, there has been excitement building around this, and I think there will be a pretty good demand for it, because Monster Beverage is very popular with the youth, right?
Yep.
And so if they come out with an alcoholic beverage, I think that given the fantastic distribution channel they already have with partnership from Coca-Cola across the board, I think it'll be very easy to sell and get in on every shelf, on every store. And I think there's going to be a demand from youth. And that's the kind of catalyst that can send the stock towards 100 plus per share. Now, just reminder to everybody that this stock has been covered in Jaguar media multiple times, but more recently on January 15th, right here, we gave you guys the bull case. And then once again on January 22nd, if you watch these videos, we gave you the bull case. And then we followed up on February 23rd, which was last week, and we recommended buying this diagonal spread by the April 90 calls and sell the March 5th weekly 95 calls against it, going into earnings. And this stock is looking to get higher. It's about 4%, 5% higher. Not a significant move, but this market is shaking off some weakness now. So we'll see, considering this is a major VOP support level, let's see if this can continue to add more gains as the day will progress from this point on. But thanks for that update.
No problem.
All right, let's go to Chronicle.
Morning. We received a question about ZVO. So I have an update on the company this morning. I believe this was first covered by Jay around Q3 last year, and then this year in January, I separately made a bullish pitch for the stock. Since then, it went up from about $4.80 to over $7 before pulling back. I'm no longer in this stock. I took profits around 6, completely missed the spike, unfortunately, which happened last week. But just thought I'd provide an update on the company following its earnings report, which took place after the close on Wednesday. Now, at the surface level, this may have looked like a bad earnings report. Like the company beat on EPS, but missed on revenue, which came in at $93.1 million versus consensus 97.5. However, if we were to go back and replay the January 6 conversations video, the core of the bull case was that this is a potential turnaround story in the making, where the company is currently trying to use its online university technology to build partnerships with educational institutions, kick-started by the upcoming sale of Ashford to the University of Arizona. So you can always rewatch the video to refresh. Now, when I look beneath the surface level of this earnings report and also at the management commentary in the conference call, I have to say the transformation story is so far going very much according to plan. I think the most important takeaway I got from all of this is that after 8 consecutive quarters of decline in student starts for Ashford, ZVO finally reported a positive inflection. no doubt helped by the ongoing integration with the UFA Global Campus Initiative. So now they're looking to close that transaction sometime this year in exchange for a 19.5% revenue share going forward. And then, of course, after that, they can be free to fully pursue similar partnerships with other universities, which is going to be the main growth driver down the road. Meanwhile, the company is also continuing to build on its other new offerings like Full Stack, TutorMe, and Learn at Forbes. They've made some significant headway here as well. Basically, Full Stack managed to add 3 new partners during the quarter, which are University of Illinois, Colorado State, and Emory. And that takes the total number of partners now to 12, which is actually double of what management first guided to when they acquired Full Stack. And by the end of this year, management expects to double the number again, up to 25 university partnerships. And then separately for TutorMe, ZVO managed to add 60 new partners, taking the total to 176, which represents 280% increase year over year. Finally, one last thing that's worth mentioning is that after years of revenue contraction, the CEO in the conference call mentioned that they are now expecting positive growth this year, and then high single digits growth next year, and then finally reaching mid-teens growth by 2023. And for the upcoming year, the next catalyst to look out for will be getting the regulatory WASC approval for the Ashford sale. Whenever that happens, which will most likely be before Thanksgiving, management will put out a press release and an 8K filing. So putting everything together, I'm not seeing a lot of negatives here, apart from the revenue miss for the reported quarter. But honestly, that quarter is already over, and the bull case has always been about the transformation. And I think the sell-off that we've been seeing in the stock over the last week is more to do with the overall volatility that we've been seeing in the broader market rather than actual bottom-up fundamentals, especially within the tech sector. So I'm expecting this stock to stabilize over time and to gradually begin rising going into the catalyst that I mentioned.
Sounds great. Yeah, I would expect the same based on all these updates that you provided. $5 appears to be new base formation over here. If you look at in the middle of January too, the stock has spent a lot of time just building a base there before we moved higher. And now given the current market volatility has come right back into that particular level. So a very easy entry over here, essentially, after potentially a while. Once this market correction is over, we're towards the tail end of this, and then we can. There's a potential another entry over here. Twice this was covered in Jaguar Media. One time, first time was long time ago, back in August of last year, and then more recently on January 6th, as you can see on your screen on the left-hand side. Worth reviewing those bull cases plus the added color that Chronicle just provided. Good stuff, gents. Thank you very much for joining. And Jags, we will see you in the chat room shortly.